Hello traders and investors, welcome back to the channel. My name is Edward Cash Trader. Today is October 24th, Thursday, and this is the top macro indicators for the stock market. We are going to explore the chart analysis in this sequence. Oil, VIX, TNT, US dollar index, repo, and then the yield inversion. Also, at the end a nice quote to help you on your trading career. So, let's go. Oil has been on a downtrend since June 2022, when there was a double top, and was ranging inside this triangle until recently, that broke below the main support. Investors tested the upper line 3 times, 2 of those were on September 2023 and July 2024, but could not break above the upper resistance. Currently, oil lost ground and went below the lower white line, which was a support. To show strength, oil has to break above this white line, and the upper resistance and retest it. But, if oil keeps below this lower white line, that means that it become a new resistance, and investors want to test lower levels. VIX was on a downtrend since March 2020, tried to break out many times, and the last time was in October 2022. Recently VIX had a strong momentum and broke out of the downtrend, and is looking good as far as the breakout. If this new trend continues, that means the reversal is confirmed, and that would mean that big things are coming. Last time this happened was in April of 2007, when started the last bull run of the stock market. As you can see on the pink line, the S&P 500 peaked 7 months later on October 2007, when the stock market started to crash. But pay attention to this quote before we keep going. Don't try to predict the reversal, it is much easier to just wait for reversal with confirmation signals. TNT has been on a downtrend since September 2020, and broke out of the trend on August 2024. But, as you can see, Treasury Note Futures is not holding the support that just formed. TNT is losing momentum, and might search for lower levels. That means investors are more likely to have turned the risk-on mode again, and it could mean that another bull run in the stock market is near. When TNT rises, it means investors are not willing to risk as much, so they search safer assets with smaller returns. But, when TNT starts to go down, that means investors are ready for more risk, and the stock market is one option. DXY, the US dollar index against other currencies, has been on a wild ride since October 2018, when it formed the current support that DXY just bounced off of it. On June 2021, the US dollar index found a bottom and started to skyrocket. But until December 2021, the S&P 500 kept going up, as well, in the same direction. But after December 2021, something changed, and a strong inverse correlation started. As you can see, as the pink line goes down, the blue line goes up, forming a perfect inverse correlation. The same process happens on October 2022, when the S&P 500, the pink line starts to go up, as the blue line, the DXY, starts to drop. That means, not every time there is a perfect inverse correlation between the DXY and the stock market, but at some point it will happen. Currently both are going up, but that is not sustainable for a long term. The US dollar index is in a strong move, searching higher levels at 104 and 109, and is signaling that it will not stop anytime soon. If the US dollar index does not stop to go up, it means that at some point, the S&P 500 will start to reverse and create another perfect inverse correlation. Repo, or the overnight reverse repurchase agreements, Treasury securities sold by the Federal Reserve in the temporary market, is also an important macro indicator for the stock market because, at some point, also creates a perfect inverse correlation with the S&P 500. As you can see, on March 2022, as the blue line, the repo, is going up, the pink line, the S&P 500, goes down. Also, in September of 2023, it is clear the inverse correlation, because repo goes down and the S&P 500 goes up. Currently, we are waiting to see if repo starts to go up, because that could mean that the stock market will start to go down, in a new inverse correlation period. The yield curve inversion is when the lower yield is higher than the longer-term yield. In this case, the 10-year yield went lower than the 2-year yield in the beginning of 2022. But recently, just happened in UN inversion, on September 2024, and there was a retest. That means the 10-year yield is holding above the 1% line, and is showing no sign of going below it. This is important because every time there was an uninversion like this one, months later a recession started. So, we know that the possibility for that to happen again is very high. And here is another quote for you trading career. Don't fight the trend. Don't miss out on the video above. Thanks for watching. Good luck and good profit. By Edward Cash Trader. Please read the disclaimer in the description below.